Welcome back to FutureFunded, and today I'm going to be going through a very simple step-by-step methodology that stopped me from taking trades that were unnecessary and weren't quite my edge. This is the exact strategy that I used when I was trading FutureFunded, which allowed me to pass my account and receive consistent withdrawals, and I'm about to show you. Okay, so if we just get into this, as we can see, the market structure on EU is bearish. We're in a daily and 4-hour bearish range. You can see the 4-hour high labeled right here and the 4-hour low down here. Okay, now one of the crucial elements of trading is knowing when to enter the market and when to stay out. And there are going to be certain things that happen in the market just before you enter a trade or just before you look to enter a trade, which are going to go against your rule set, or they are going to showcase itself as invalid. And this is one of those times. All right, so if we was to have a look, we've got this break of structure here to the downside. We are within this 4-hour bearish range, so anything that happens within here is bearish. We've just tapped into this 4-hour point of interest close to the high, and now we've started to move away. So there is a potential for some downside movement to go all the way back and carry on that downwards momentum on the higher time frame. Okay, so that's what we want to do. All right, but wanting and doing are two different things, because right here you can see we've got a high, a higher low, a new high, and now we've just had a 1-hour break of structure to the downside. So first red flag, we've had the break of structure to the downside, which is good. All right, ultimately that is good, but what we see normally, or more often than not, price does normally have some form of reaction from these 1-hour breaks of structure. Okay, where most people think, okay, it's a break of structure and we're now going into a bearish range, which is true. At the same time, there is a lot of liquidity normally sat just below, which means price normally tends to have some form of move up like this before we get that move down. All right, so that's one of the things that I was looking at coming into the session. And then we saw a 15-minute break of structure as well. We got high, high, low, new high, break. All right, and once again, we've just tapped into that break of structural low. We've got Asia session right here. We have swept that, and then we've tapped into this point. So everything's starting to line up quite nicely. All right, we do have a potential red flag with the break of structure, and we have to be wary of that. But the main thing that put me off taking this trade was this. So if I go into the 5-minute, we can see we've got a low, a lower high. So this was our break of structure. We then got a new low, which formed a new break of structure right here, which then created this break. And now this was our 5-minute range. Okay, so we now know that we want to trade within this. Okay, now whether that's we wait for price to push up, break the structure, grab liquidity, and then come back down into this area, and we can take a short position down into it and actually sell into the POI, or whether we want to see a break of structure, wait for price to come back, and then look for longs up to this level or where this POI is right here, so that we can fulfill that slight retracement. Like I said, the 1 hour is broken structure, right? So we are expecting some kind of retracement or pullback, so we could go in line with that. All right, but the thing that really put me off was this. When we got this break of structure right here, we then got pushed down. Price then attempted to try and make its way back up. It failed, so it created a failed high, in my opinion, in terms of it didn't break this structural high. It then came back down and tapped in to this 1-minute POI and then started to move away. Now the reason why this is an issue for me is because on the 5-minute we have no break of structure to the upside, so we don't actually have any confirmation other than a 1-hour break of structure to the downside, remember, so we don't actually have any confirmation to go up. We have no breaks of structure on the 5-minute. Okay, so that's the first issue. The second issue is that price then taps into that 1-minute point of interest and then starts to move away. So even if I was to look for some short positions now to come back down to here, it would make my setup more or less invalid. Reason being is because the move has kind of already happened. The move has happened where price is pushed up, it's then come back to that POI and then left. So it makes my setup a lot more risky, to be completely honest with you, and it makes it a lot more invalid essentially. All right, because even if price comes up to this point of interest up here, yes, I could look for a short, but the likelihood is now price is more than likely going to continue moving higher. Bear in mind, we still have Asia high to take out as well, and that has to be taken out at some point as well. All right, so yes, you could say it's a little thing, but these are the little things that you have to be careful of, and these are the little things that are the difference sometimes in when you have a losing trade or a nice winning trade. It's as simple as that. And knowing when to stay in the market and when to get out of the market is one of the most crucial things. Okay, we have created a 5-minute point of interest in doing once actually price came back to this 1 minute point. So yes, you could target this as your target, but it just has a higher probability of continuing to move higher because we've already had that formation or that pattern formation begin. Okay, so that's one of the things that invalidated the setup straight away for me, and I'm happy to stay out and I'm happy to wait. Most of the time when it comes to failing traders and so forth, and something that was, you know, humongous with myself, I'd say about 2-3 years ago, was not being comfortable enough to say I'm not going to take this setup. Okay, that's one of the most dangerous things. When you have to take a setup, when you are itching to take a setup, 9 times out of 10 you'll take something that looks close to what your edge would be, but you can see in the back of your mind, or you have a gut instinct that there is 1 or 2 things off, but you still take it anyway. And you take it anyway just because you want to trade. And you take it because not only do you want to trade, but you want to see the outcome and you want to have an outcome. You're focused on the outcome. Focus on trading itself. Forget the outcome. The outcomes are irrelevant. All right, your profits and stuff like that, they're irrelevant. They're not going to mean anything anyway if you can't get the skill right. You're only ever going to see red anyway. You need to focus on, does this setup hit my strategy, my plan? And once I take this setup, can I comfortably look at my plan and say I've ticked off absolutely everything? If I can't, stay out. If you can, enter without hesitation. That's the key. All right. Most traders will normally slide by their strategy and they'll have, let's say, 5 things out of their 6 rules, and they'll think that's okay to take that. I don't. All right, and that's why most traders fail, because they don't actually stick to their strategy. It might be 1 or 2 things or 3 things that they're missing out. Okay, so yes, okay, this trade might end up working, but it's not a setup that I'm going to be looking for. All right, it's not something that is a part of my edge, and I simply cannot take it. And it's one of the very things that allowed me to pass my accounts with FutureFunded, because I came to a point where I started missing most of the bad trades and I only focused on the cream, which in my case is my edge. All right, and that gives me a higher probability. So I hope that helps, guys. I hope you found that useful, and I'll see you on the next video. So guys, there you have it. Now you've seen the very elements that I look at which dictates whether I actually take a trade or not. Most of the time I end up not taking any positions, because 80% of the markets is filled with nonsense and 20% is the cream. And the key is how to understand when to enter and when not to enter. So I hope you found that useful, guys. As always, make sure to like, comment and subscribe for more content, and I'll see you in the next video.